We've also got Navin Sahadeo of Edelweiss who's joining in. Navin, would you tend to agree with both Yatin as well as Shrinik that, at least on the face of it, it isn't all that bad a number? To some extent, it was pretty much factored in.
Yeah, I would say that to some extent, definitely it is being factored in.
Okay.
Clearly, what has happened is that this company is basically suffering because of having absolutely no presence in South. I would say, reason being that that's the only region where prices have held up firm so far into the year. Rest all other regions, they have been fairly weak. And as rightly pointed out by previous participants, prices have been weak in North and West, for which Ambuja did take a beating. So EBITDA, as we see it, down almost 35% and PAT down almost 45%. And I think even in the current quarter, which is the September ending quarter, the pain continues to stay. Prices continue to remain weak in both North and West markets, which will continue to dampen its earning even in the coming quarter.
Navin, Yatin here. Just wanted to ask you, the realizations have been much lower than the street expectations. Also, the higher freight costs have, hit the margins for Gujarat Ambuja Cement. But going forward, what do you feel about Ambuja? In terms of the volume recovery post the monsoon, do you see some, volume pickup for all of these players being in the western region? Do you think the realization recovery or the pricing power that Ambuja has possibly will drive the valuations from here on, and the recovery could be seen the sharpest for Ambuja going forward?
I think that's will be a tall order to really expect, because as we speak, as I said, it's going to be a typical seasonally weak monsoon quarter. So at least in the near term, 2-3 months, at least till September, I would say so, that you're unlikely to see any uptick in volumes, and also any uptick in the prices as well. That's the seasonally weak quarter. So I don't think in the near term if you can really expect, but post that, I think yes, everybody is expecting. But that again, for Ambuja, it will be a bit below the industry, because in terms of volume growth, it will still be below the industry because they have not really added any capacity. So for them to outperform, I don't think so. If that's a right thing to expect, especially in the light when other companies in the north have added capacity. So I don't think volume outperformance is something that you can expect. And pricing also, I don't think in the near term you can expect that. Of course, it's just going to be an industry related phenomenon. So after monsoons, you would definitely expect some price rise, but not something very out of beat or out of whack for Ambuja per se.
So, Navin, given the fact that the outlook remains muted, the results for Ambuja Cement have not that been great. So, would you keep your rating unchanged on the stock, and even in terms of the price target, will it be the same, or you possibly would tone it down going forward?
It's very obvious. We'll have to tone it down. Reason being, firstly, we were not really expecting the north market to be so weak at the beginning of the year. So there are going to be certainly downgrades, to ours as well as consensus estimates. And by the way, they are going to be forced downgrades, because now, 2 quarters are already over for the year in the calendar year. It's a calendar year-end company. So 2 quarters are already over. Third quarter is obviously a seasonally weak quarter. A very tall order to expect much in the balanced December ending quarter. So I think earning downgrades are definitely inevitable. Considering that there will be earnings cut, and yes, I would definitely expect some cut in the target price as well. Mm-hmm. We have a hold recommendation, but I definitely don't see any upside risk. Any risk to that. It will probably, in all probabilities, remain a hold kind of a recommendation.
Right, Shrenik, let me ask you that same question then. Would you back Navin and go to the extent of saying that the next few quarters are going to look pretty dismal, not just for Ambuja, but perhaps even the cement industry as a whole? And in that light, would you also then look at paring down your expectations from that entire pack?
See, currently what we have a neutral rating on the stock with the target price of 234, and the stock is currently trading at the same level. When we look at the valuations, numbers for second quarter were in line, but definitely, as the other participant has also said, third quarter will be a weak quarter, being a seasonal quarter. So surely we would also like to revisit the numbers, and we most probably will be revising the numbers on the downward side. So more or less on what valuation front, the stock looks to be fairly valued, and after downgrading also the stock, we will have a neutral rating on the stock.
Well, Shrenik, coming to you specifically, there have been talks in the market that going forward cement prices might move up, given the fact that a lot of announcements are pending in this session of the parliament, and cement demand possibly would pick up. Do you think in this scenario the large cap cement companies, in terms of the valuation, won't be in that advantage versus the mid cap cement companies? So, in terms of Ambuja, ACC, and Ultratech, which is the top large cap pick and in the mid cap space, which other cement recommendations do you have for your clients?
On a large cap front, what we can see is Ultratech also we have a neutral rating, as valuation from all the large cap stocks are trading at more or less in line with the historical EV by EBITDA. And when we look at the replacement cost, also the large caps are trading at a huge premium to the industry replacement cost of around $140 to $150. When we see Ambuja, it is trading at around $175. When we see at Ultratech, it is trading at around 200 EV per ton. So this kind of valuation on a current level, looking at the market scenario, looks fairly priced enough, and we have a neutral rating on all the large cap stocks. But when we look at the mid cap companies, and definitely it is trading at a huge discount to these large cap companies. Most of the mid cap companies like JK Lakshmi, JK Cement are trading at a EV by EBITDA of around 7 to 8 times, or even lesser than that. So we have in the mid cap, we have the buy call on stocks like JK Lakshmi Cement, JK Cement, and Mangalam Cement, which have added the capacity in the recent period, or just like to finish their capacity addition in the coming quarter or two. So going forward, once the demand revives, we will see the volume pick up for these companies, and the companies will be delivering good numbers. So we have a buy call on these mid cap companies.
All right, Shrenik and Navin, thanks so much for taking time out for us and walking us really through what you made of Ambuja's second quarter showing. Yatin, a quick last question for you then. What are we expecting from the stock? Because, at least from the sounds of it, both the analysts that we spoke to had more or less factored in a dismal showing. Do you believe the market somewhere, also thinks the same way?
Well, Tanya, if you look at ACC results and Ultratech results, both of them did